how far could the dollar fall in your perspective at the moment? I know we were talking earlier about how the UK fall in the sterling could in some way offset that. But when you're looking at an increase in growth of the US of more than 4 percentage points, how much could the dollar weaken against that sort of data?
So I was cautious, and I told you slippage in the dollar of about 1.5% cumulatively by the end of calendar year 2018 is our base case. Despite that, our view is still that there will be one more leg higher up in, for example, dollar RMB.
Okay.
And so that is an inhibiting factor for the dollar. But note that I said cumulatively. That's our cumulative expectation for the return in the dollar into year end.
And let's look at the flip side of the dollar renminbi, because what's driving the renminbi lower? Is it in some way China's own actions, or is it generally the trade tensions and the ongoing concern about China's growth?
So it's China's own actions, and actually on a back of the envelope basis, if you look at the competitiveness gain that China has from the recent sort of 7 to 8% devaluation versus the dollar, it roughly equals or even slightly more than offsets the size of the tariffs, the impacts of the loss of competitiveness through the tariffs. So it's a very engineered move on the part of RMB.
Is it manipulation?
Well, of course it's manipulation, but that's what China does. Some central banks wish that they could do that. And in fact, when they can't do it with actual physical tools, that is, manipulate the exchange rate, they do it verbally. They do it with rhetoric, so have their cake and eat it. But it's no secret that China does control its currency, and that's how you have to approach. When you're looking at China and you're trying to analyze the currency, you always have to approach it from that perspective. It's a managed currency. Now, they've made some policy mistakes in the past. 2015 was an episode where there were policy errors. They had this dramatic slowing in the economy. They had the stock market collapsing. They were trying to hold the currency steady, but they realized that they had to succumb to private sector forces, and when they did that, they created a vicious spiral of RMB outflows, which they then had to arrest. This time around, they've got that in the rearview mirror.
Okay.
And also, the fiscal backdrop in China is quite supportive for growth. I wouldn't necessarily say that a further buildup of debt is good, and certainly not a further buildup of investment to GDP, but they have the tools in terms of the augmented fiscal policy and the central government's fiscal policy to backstop growth, and that is what they're doing. So this move in the RMB is not coinciding with, I would say, indiscriminate capital outflows. It's a very managed decline. That doesn't mean it couldn't turn into something more chaotic, but that depends on how the trade war progresses.
In terms of, you said renminbi weakness has in some way offset the tariff knock-on effects for China in terms of its own competitiveness. What about dollar weakness? If it does weaken 1 to 1.5%, as you were saying, I mean, do we see that being a supporter of growth for the US going forward?
Yes, possibly a little bit. I would think that officials within the Treasury, economists are now looking at the dollar as probably moderately overvalued relative to long-run equilibrium. And in fact, that's what the IMF's own staff assessments basically conclude, that the dollar is moderately to even significantly overvalued. So we're getting into a phase now where prolonged strength in the dollar from here, rather than a little bit of weakness boosting growth, prolonged strength in the dollar from here could be a big drag on the economy. It will be very interesting to see what exports, net exports have contributed to the Q2 GDP figure that's due later today.